Insurance was built on trust, but slowed by process. Manual claims, intermediaries, and long delays have made protection inefficient. By 2025, blockchain is transforming coverage, replacing paperwork with parametric triggers and tokenized risk pools that execute payouts automatically. Unlike traditional insurance, parametric coverage pays based on data, not damage reports. If rainfall drops below a threshold or wind speeds cross 120 kilometers per hour, a smart contract triggers payout instantly, no disputes, no delay. And this precision is bringing speed, transparency, and fairness back to insurance. From smallholder farmers in Africa to catastrophe coverage in the Caribbean, parametric systems are closing the protection gap, reaching people traditional insurance never could. By 2024, pilots processed payouts for over 9 million farmers, and by 2030, parametric premiums could reach $30 billion globally. Behind each parametric contract lies a tokenized risk pool, a decentralized system where institutions supply capital directly to coverage pools. Smart contracts manage inflows, payouts, and rebalancing. It's insurance funding made transparent, programmable, and global. For institutions, this evolution brings three major advantages. Transparency. Every trigger and payout is visible on-chain. Programmability. Policies can evolve dynamically with real-time data. Diversification. Exposure to climate and catastrophe. Linked returns with low correlation to traditional markets. These systems are already live. Weather insurance uses oracles to verify rainfall and temperature data. Crop protection funds, payouts tied to yield indexes. And on-chain catastrophe bonds tokenize institutional access to climate risk, turning insurance into a measurable, tradable asset class. Yet, automation brings new challenges. Oracles must be tamper-proof. Liquidity must remain stable during extreme events. And compliance must align with solvency and consumer protection standards. That's where digital asset consulting ensures these systems meet institutional risk and regulatory expectations. For investors, tokenized insurance represents both alternative yield and social impact. The global protection gap exceeds $1.4 trillion, and blockchain-backed coverage models are bridging that gap with transparency and scale. Institutions now view parametric insurance as a new frontier for sustainable finance. At Kenson Investments, we help institutions navigate this evolution, where insurance becomes code, risk becomes data, and protection becomes programmable. Because in the future of finance, trust is automated and coverage is instant. Visit kensoninvestments.com to explore more.